Hey guys, and welcome back to the channel. And if you're new, thanks for clicking on to the video. Today's video, I'm looking at our indicator that we used that has helped us throughout this entire bull market, telling us when the low was in and potentially what is to come next. We're going to update that in today's video along with the traditional markets, as it's your home of macro cycle analysis. I'm covering Bitcoin, cryptos, the stock markets, and the real estate cycle. I'm Jason Pizzino. All right, let's dive in after you've hit that like button. And of course, hit the subscribe if you're new here. The agenda today, looking at a few of the narratives, few of the headlines, and then of course the charts, the objective data, and the analysis on those charts. There are a few things that we are now beginning to see come to light for this next phase up, or at least what I'm calling this next leg up. The final stage of all of the markets coming together, as I'll show you in today's video. Basically, a lot of the money coming into the system and potentially fears as to why the market will go up and then eventually correct in a big way. A couple of things we've covered here, but I'll update again today. US dollar, interest rates, more money into the system, the economy, of course, stock markets hitting new all-time highs in the face of all of the recessions and the fear porn that's out there. I'm doing my best to keep you up to date with the bull porn. Some updates here for China as they have pumped in the last 2 days. Big moves up there for China, and of course BlackRock as well. So let's kick it off with China before we get into the other pieces. China shorts are all in, even more than at the bottom. Just looking at the short interest here in a percentage term, China shorts are all in even more than at the bottom. Basically, looking at the bull markets are born on pessimism, and you could flip this and say that bear markets are born on optimism. Right now, at least objectively speaking, through crypto and the stock markets, we are definitely seeing more of the neutral phase in the short term, and in the longer term, I mean, over the last few months, you've definitely seen a lot more of the fear. You can see this on the fear and greed index. It's been reading underneath 50 for quite some time. And then if you go underneath at sort of 45, you're into that fear stage. Even further, then you're into extreme fear. That, of course, we've all experienced in August when we were told there was supposed to be another recession. And of course, the markets have absolutely pumped from there. Markets are going up. It's a macro move. The stock market, same thing. And we've seen more of that fear into the markets, even though they're pushing to new fresh highs. And so now we're seeing China, or at least the traders in China, the short interest trying to anticipate the market going down, basically all in, and the market has absolutely pumped. China on Tuesday jumped 8.5%. Huge move, breaking past 50%. Big volume here as well. And it's on the verge now of putting in a higher low compared to the low that was in January, and possibly the old inverse head and shoulders pattern forming here. It needs to break through this neckline to the upside and then get past some of the key levels there around 12,800 points, and then the major 50% at 13,500. But it seems like it could be into that process now of heading up. And why is this happening, everyone asks after the fact. We could potentially say that it is blamed on the money supply coming into China. So more and more money printing going on in China. China's 100 billion yuan question. Does rare government bond purchases alter policy course? I'm not going to speculate on that. All we're seeing is a lot of money coming into China, or at least them creating that money to buy their bonds, so on and so forth. Markets have pumped from that news. So the confirmation that I'm looking for on a longer term basis is closes above this top in May, call it for around number 13,000 points, and then the 50% level of the entire range. That's at 13,436, so 13,500. If you want like a nice key level there, 13,500. Essentially what I'm saying here is a lot more money coming into China, a lot more money being printed by China, a lot more optimism there. The pessimism has been around for quite some time. There's been many reasons to be pessimistic on China. Nonetheless, the rest of the world has been going up, and now might be that time where China plays catch up. Whether it breaks to a new all-time high, different question altogether. As long as it's in lockstep with the rest of the market, we could potentially see even bigger moves to the upside for world economies. So we're looking at this in terms of China. We've seen the money printing there. What else is going on? Well, let's take a step back into the broader picture here for the entire cycle, the 18.6 year cycle. Now, just recapping a post here that I put up 7 months ago. Basically just looking at the everything bubble that I think we're in, that I believe we find ourselves in because of what we're seeing with prices. In a bubble, prices go up. We've had new all-time highs all year for the stock markets. If you've been following the channel for some time, by hitting that subscribe button, of course, like the video, you know that we've been talking about this for many, many years. So I just bring these up every now and then in case there are new viewers. This is not something new that I'm bringing up in this particular video, that the markets are up and this winner's curse phase. This is something that we've been talking about for many, many years on the channel. And like this says here, bull markets are born on pessimism. That's how this has helped us stay on the right sides of the market for the macro moves. There was obviously a ton of pessimism in 2020. They were the lows for the second half of the cycle. And now we find ourselves still in this bull market. 2022 was a correction, but remember 2021 was a big, big move to the upside. So I think there's a lot longer to go in this cycle. We are somewhere around here. Remember, I did post this in February, essentially just as an update here for that macro 18-year cycle. So for the stock markets, the S&P 500 has found itself at another new all-time high in the last several days. You had one on Thursday last week, and then yesterday it also punched to a new all-time high. And in the after-hours trading, we're getting very close to putting in another new all-time high for the S&P 500 on the futures market. The NASDAQ also pushing to fresh highs. The all-time highs back there at 20,900 and change. And then for the Dow Jones, yesterday also hit another new all-time high, closed lower, but at least it put in more of these new all-time highs as the markets all continue up around the globe. The volatility index has also crept lower, which is what you want to see in a bull market. Again, for the guys who've been following for some time, which I say often because a lot of this data and this analysis that I put out builds upon the previous day and it puts the picture together for the reading overall. I don't go through sort of news headlines and chop and change day to day. It's the same thing over and over again, which I think is helpful for traders and investors because that's essentially how you will learn. That's the tactic that the media plays. They change headlines all the time. The focus here is to look at our indicators and our signals, review the analysis to see if there's anything changing on a broader perspective. And so far there hasn't been. In the case here, like we looked at, the volatility in index is back within the bull market zone that I've coined here between roughly 11 and 17 on the VIX after some pretty significant pumps to the upside. That's only natural, especially when you get low volatility for quite a considerable amount of time. There's June into August of the following year. So about 13 months there before we had a pretty significant spike. The Home Builders Index, which is kind of like our canary in the coal mine for the real estate cycle, which is the biggest cycle of them all, the most important one that we should be watching, is also trading around all-time highs. There have not been any significant long-term breakdowns. There have been corrections, pretty fearful ones, pretty extreme volatility, but it hit a new all-time high just last week, last Thursday actually. So that's still in good health there. The Aussie market still higher, obviously one of the smaller countries and economies around the world, but for the Aussie viewers, we're doing pretty damn well here. And Canada as well, new all-time high yesterday, currently just sitting a little lower there. And then we head to India, the emerging markets, another new all-time high on Wednesday. So it still seems like there is a lot of appetite for risk in the traditional markets. So back to our agenda, we've looked at new all-time highs, we've looked at China, we've talked a little about US dollar and interest rates in previous videos, so I'll recap that as well. But in terms of the economy, is it weakening? Not at the moment. The data shows that it's not weakening at the moment. Eventually it will, and I think we'll be able to see that in the charts. But for now, the smart money is suggesting we're going to see higher and higher prices and higher profits for the companies in the coming quarters. That's why the stock markets are up. They're usually 6 to 12 months forward looking. So if they think there's going to be some profits in those companies, they're obviously buying it now. They don't buy it or sell it on those earnings announcements because it's already been priced in. As for the interest rates and the US dollar, there's a lot of narratives around interest rates being cut, the first cuts, and the collapse of the economy. That's why I've got it here, and I thought it'd be a good time to update this. Some pretty interesting data here from Sentiment Edge. looking at the times where the market has, well, we've got into a tightening cycle, the end of a tightening cycle, and then you get those first rate cuts. Now, to go over the data here and look at the summary, essentially what it's looking at is, opinions aside, the imminent cut in the Fed funds rate has been a crapshoot for investors. Essentially, it doesn't say that the market must collapse when there is a cut. There was no consistent pattern in forward returns after significant hiking cycles. The last few have been major warning signs, while most others were not at all. They were more consistently negative for the dollar, which is exactly what we've been looking at, with the US dollar also coming down as part of the second half of the real estate cycle, breaking to new key levels. And I've got another pretty strong case here for lower dollar, meaning much higher prices for Bitcoin. But just to finish this off, they were more consistently negative for the dollar. Tech stocks are, ironically enough, while being good for treasury notes, bonds, value stocks, and defense sectors. And the results themselves show up right here. Basically, 12.6, 3 months later, using this signal only shows a coin toss. 50, 56% either way. 6 to 12 months later, it could be up, it could be down, just based on interest rate cuts, which is why I've said many times before, it doesn't matter about interest rate cuts. And I know that ruffles some feathers, people saying that they've got data to suggest otherwise. If that's the case, go ahead and use it. But in terms of what I'm reviewing and what I've been looking at for a long time, it doesn't matter about these interest rate cuts. We're going to see cuts, which we have. We'll eventually see hikes, and then we'll see cuts again. And that leads us over into cryptocurrencies. Headline here from House of Crypto. Met him over in Singapore, actually. Great guy. BlackRock reveals it's quietly preparing for a $35 trillion Federal Reserve dollar crisis with Bitcoin. I don't get too sold on headlines. However, BlackRock has been a pretty significant narrative when it comes to BTC, especially with the ETFs. And if BlackRock happens to be that bullish narrative that the market looks for, that could be part of the reason why people think Bitcoin is going to go much, much higher. Now, the interesting part here is the charts, to me, are saying that Bitcoin is going to go higher. The problem and interesting part that I find is that when we get towards these peaks, when the majority of people are in, maybe in 12 months' time, thereabouts, give or take, of course, the emphasis on these headlines around the problems with the US dollar, the problems with the system, BlackRock buying more Bitcoin, perhaps, this will become more ingrained at the peaks and stop people from selling their Bitcoin or their cryptos, their profits. And you'll hear more from Michael Saylor. You'll hear more from potentially Cathie Wood and other people who give you ridiculous calls over $1 million of, per BTC. I say it now because it's easier to see how that could happen, because at the peaks, it's way more difficult to see how that could happen because you don't want to believe it at those peaks. So for now, this could be a good reason that the masses think it's important to buy BTC. At the peaks, I'm saying that they are going to believe too much into this narrative and not take profits. Mind you, this could go on a lot longer than what a lot of us are anticipating. Maybe we do see this head further into 2026 or later into 2025. I don't know. We'll find out as we go, and I'll use the swing chart to identify some of that changes in trend. But for now, that would be a pretty big reason why that narrative could push us a little higher. On top of that narrative, as I talked about in the agenda, is the US dollar. And I put this post up on X. Go and find it. Go and follow my X account and bookmark this. Just looking at the parabolic bull runs for Bitcoin when the US dollar broke down from key support levels. When the US dollar broke out of key support levels, that's when you also saw the Bitcoin bear market take hold. And so in terms of the pink line, that's BTC. In the bar chart in the background, that is the US dollar. We're on the verge of another significant, very significant breakdown here around that 99 to 101 level for the US dollar. Could this be the start of that next big parabolic move? Obviously, time will tell, but it's definitely high up on my priority list here, one of my big signals for now, because there are no holy grails, as I say here in the post. We saw it just recently in 2022, where the US dollar broke down from that key level almost to the day. that's when Bitcoin bottomed. And the same sort of deal on the breakouts there for that big fast move. Bitcoin broke down from the low of COVID, obviously heaps of volatility, USD dropping, USD spiking, broke down from that, and then started its climb higher, obviously slower at first, and then on this big parabolic move. So something to keep on your watch lists for sure. And I'll definitely be looking at this on the channel. In terms of the TA, just the technical analysis, we've so far got a higher low formed for BTC versus US dollar. The higher high only comes into effect once we break the August top at 65,100 bucks. So as I've talked about before on the channel, which is why I suggest subscribing so that you can stay up to date with the analysis, we're looking for an overbalance in time and price. And one of those key ranges was roughly around $16,500 and beyond about 37 days, which have been some of the previous key moves that Bitcoin has put in. So we're definitely beyond the 37 days now, but we need to get to that $16,500, which takes the price to about 66K. So above the swing top and to 66K would be an overbalance in time and price. That essentially means that buyers, actual market participants, not some airy-fairy shit. What is actually going on is buyers are stepping in quicker because you got the higher lows, and they're willing to buy the price up at higher lows. You've got the higher lows there because it didn't break the August low, and they're willing to do it for a longer period of time than they have done in each of the breakdowns. That is quite important, and you can use this across any market, your stock markets, your stocks, different cryptos, commodities, because now you're starting to see what the market participants are actually doing as opposed to what they are saying. And you can hear all sorts of recessions and fear in the market and all sorts of that crap, right? But when you actually get to see in the chart what they're doing, now you've got something to work with. It could be manipulation. It could be BlackRock. It could be whatever the hell you want it to be. The main point is that it's happening and they have to make the trades on the chart, and you see that data coming into the chart. So that's the most important thing there. Now, as I struggle through this end of a cold that I have, the problem that I think many people will face over the coming days or weeks is that they might be waiting for a significant pullback again. So another significant correction, as many of us have gotten used to Bitcoin dropping back underneath 60 grand. If this is the higher low, we might not get that drop back below that sort of 58 to 60 grand. I'm calling it roughly 58K because that's where a lot of the prices spiked to, but did not close under that level. You can see 58K on the chart here, and the weekly had basically been closing above that level many times, even after extreme fearful events. And so maybe we see a spike there. I'm not saying it happens, but I think many are potentially waiting for lower prices to this low in September that we had around 52K and this low here. I think a lot are sort of waiting for that, and that might freak them out that we don't get that, which then causes the market to go even higher because they'll have to get on later if they're not ready and they're not positioned for a potential move to the upside. Of course, could be wrong, but this is essentially what happens at each of those times in the market where you see Bitcoin start to push away. You had all these guys talking about all the shorts they're taking here, and then it pushes away even further. They reckon it's going to come back to the 32K. This is sort of that psychology that goes on in the market, and it doesn't. It gets to 38 for a brief moment and then powers away again. Then you got to wait sort of 6 months for it to get back even close to that ETF top. As an example, 48, 49K. But when it did get back to 49K in August, it was the absolute opposite market sentiment to when it got to 49K in January for the ETF release. So the ETF released in January, 8 months earlier, extreme greed. 49K again in August, the Japanese yen carry trade fears of recession, extreme fear. So you had extreme greed and extreme fear for the exact same price 8 months apart. So I think that could be at play, and then you start to see the market push away from those levels. So how long can that last? Well, I'm going to use the swing indicator yet again. This is the GAN swing indicator. You can find a link to this in the video description, along with our TIA premium sale. It is on now. If you subscribe to the free report, get your email on that list, you'll get the email out today to let you know about the coupon code for TIA premium. So back to the question of how long might this last? Well, taking a look at a couple of these previous swings, 6 months to the upside, that's what we saw from October into that peak in March. And then from the March period to the August low is about 5 months. So we're into the 6 months underneath the old all-time high, but are roughly around 5 months to that low. Now, in previous moves, Bitcoin has done these, the previous significant moves. You've got 5 months here. There's a bit of a pullback. Then you've got another pullback again, or from that pullback low, 7 months, and then into the final peak after a very, very severe, extreme fear move in May. That was pretty bad times. We were going live. There was 20,000 people on live on this channel watching that day as it dropped. From that point, a couple of months later, it was up for 5 months. So if we're just looking at history, roughly around that sort of, give or take 4 to 7 months from this low, that could take us out to December, all the way to roughly around March before we could see some key turning point. More on that in the next videos coming up. Well, this is something that I came to you with in roughly around, well, I've talked about the left and right for ages, but this became big headline stuff in February and March of 2024, with many thinking that we're in a left translated cycle. I stood firmly that this was not a left translated cycle. I could still be wrong actually, because it hasn't broken past that high yet, and all this could come crashing down. However, this is our key edge to the rest of the market. They don't know about the 18-year cycle. There's a lot of people that do, but the majority of people don't. And in terms of the 18-year, we're likely going to see higher and higher prices for the coming months, which I think will lead Bitcoin up higher past 74K, potentially over Q4 or Q1 of 2025, which means, well, this cycle technically turns out to be a right translated cycle. Bitcoin's at 22 months since the cycle low. In previous cycles, this has basically put it at on par with coming up to test those tops. You can see for the 2020, or, from the low in 2018 to 2020, that month was October. So 22 months, October, and it was coming up to test that top. November was the big breakout month, and then of course the rest is history from that point. The cycle before that in 2016, the 22nd month from the low was coming up to test that swing top again, and kind of going back to the bear market tops as well, going back to test those levels. The following month, around 23, 24, was the next big breakout point, which then tested the previous old all-time high. So basically looking at testing key significant resistance points. Regardless if they're the old all-time high, we're just looking at key testing times. And that seems to be coming up in Q4. So with Q4 right around the corner, I've got an October update video coming your way. Some pretty interesting stuff about October for the stock markets. As we lead into the election, there could be some downside happening, and I've got a bit of data to get through with that. But I'll leave it there for now for this video. Make sure you hit the like button, subscribe to the channel so you're updated for that October update for Bitcoin and the stock markets. Hit the notification bell, of course, and the TIA premium sale is on now. Get on board with that, and I'll see you guys back here at the next video. Thanks again. Until next time, take care and peace out.